All right, so just finishing off this question with the December transaction, which is so it's explicitly put there in the question, and the other thing that we need to do in December from the June transaction. So December depreciation charge for the year is 2% of book value. The depreciation charge is to be calculated from the date of valuation and the date of purchase. Okay, so what I'd say about the book value thing here is it's not really relevant because we revalued it, so we cleared out any depreciation, and then when we bought that new asset, there was no depreciation attached to that either. So it's just going to be 2% of the cost or 2% of the value. It's the same thing for us in this question. The one thing to watch out for here, and I mentioned this when I was looking at the January one, is a buildings depreciation charge. And when I revalued land and buildings at 800, it was noted that the land element was valued at 110. So I'm not going to depreciate the land. I'm going to depreciate just the building. Okay, so 800 for land and buildings, take away 110 for land is 690,000 for buildings, and that's what I'm going to depreciate. Okay, so it's from the date of valuation. I valued it on the 1st of January. Okay, so for depreciation for land and buildings, that's going to be 690. So that's my 800,000 take away the 110,000 for land multiplied by 2%. And then because it's from the 1st of January, I don't need to worry about months or anything for that one because it's a full year. So that's 13,800 for depreciation of the buildings that I owned myself at the start of the year and that I revalued at the start of the year. But I've also got these new buildings, 180,000, that I got when I purchased the other business in February. So that happened on the 1st of February. Okay, they're nice seeing these questions. They won't have it halfway through the period or anything. So it's on the 1st of February then. I've got buildings of 180 and they're depreciated from the date of purchase. So I'm going to depreciate them from the 1st of February to the end of December. So I have a second amount that I'm going to put into depreciation, and that is 180,000. So what I purchased multiplied by 2%, my depreciation rate, but then multiplied by 11/12, because I'm only depreciating it from the 1st of February to the 31st of December. And there's another, was it, 3,300 maybe of depreciation. So basically total depreciation charge now is 17,100 euro. Okay, so there is my depreciation for buildings. And there's going to be another half that I'm going to put that in profit and loss, but I'll wait till I have all the depreciation ones done. Let me see, vehicles, then they just tell me there's 8,000 euro depreciation, so that's fine. I don't need to calculate that. So there's vehicles depreciation, so another 8,000 euro is going in there. And they don't say anything to me about depreciating what's left of the equipment, so that's fine. I will leave that as is. So that's 25,100 euro of depreciation. Depreciation is an expense in the profit and loss account, so minus 25,100 from the profit and loss account. So that's the depreciation dealt with. As I said, then the other bit that I need to do in December, I think the official solution does it all in one column. I've split it out here. I think it makes it a bit easier to follow, but either approach is fine. So June, received a bank statement showing a credit transfer of 7,200 to cover 8 months rent received in advance from the 1st of June. So June, July, August, September, October, November, December, that is 7 months this year and 1 month next year. So 8 months in advance from the 1st of June. Just be careful with the 1st of June. That is 7 months this year and 1 month next year. Okay, so what I did is I put 7,200 euro in as my rent receivable. All right, what I want now is 1/8 of that still there at the end of the year as being rent receivable. Okay, the 7/8 then I'm going to move it out of rent receivable, and I'm actually going to put it in the profit and loss account because it's income for this year. Okay, so what I'm aiming for is to have that 1 month out of 8, which is for next year, sitting there as rent receivable at the end of the year. So you can figure it out as 1/8 there and then put the other month here. What I'm going to do is just going to go 7/8. So equals 7,200 divided by 8, because it was 8 months, multiplied by 7, because 7 of those months are in 2016. So that's 6,300 going there. So then the 1/8 is 900 is what should be there at the end of the period. All right, but so again, sorry, so that should be subtracted because you're taking it out of the rent receivable. So minus 6,300, and then that's rent received in 2016. So that's other income. So that should go on your profit and loss as income. So add 6,300 to your profit and loss. Okay, so that's the entry to kind of take this year's rent received out of the rent receivable liability, just leaving what is actually receivable, what is in respect of next year there at the end of the year, the 900 euro, and moving what was 416 onto the profit and loss account. The other one then, so I don't think we saw this one in any of the ones we did in the book. I think the book tended to do ones where this was up to April 17. We had to deal with it this way, so we're dealing with something slightly different here. So 4,800 euro is to cover security costs for the year ended 30th of April 16. Okay, so of that 4,800, 4 months of it are for this year. Okay, so they weren't, so if you remember here, I had expenses due at the start of the year. So that was expenses for the previous year, so for 15 that I owed. Okay, so this 4,800, some of that is paying the expenses due that are from 2015, but some of it is for this year. Okay, so it's for 4,800 for the year ended April 16. So 4 months of that should go on this year's profit and loss account. Okay, the 8 months then should be in here reducing the expenses due because they were for 2015. All right, so what I'm going to do here in December is I'm going to move 4/12 of that out. So I'm going to go 4,800 euro divided by 12 multiplied by 4 is 1,600 euro. And then that's an expense. So I'm going to take that away from my P&L. Okay, so that's 1,600 expenses for this year. All right, so there is, so again, so in June, it was expenses due actually being paid. So I reduced the expenses due. I took them away from the expenses due because they were, some of them were for 15. But then I look at the end of the year and I say 4,800 is for a year ended April 16. So 4 months this year, 8 months last year. Okay, so the 8/12 is, I suppose, you know, if you do 4,800, take away 1,600, that's so it's the 8/12 reducing the expenses due because that's been paid. The direct debit came out. All right, but then the 1,600, because it's for this year, I take it out of expenses due and I move it into the profit and loss account. All right, so that's everything done now. If I just kind of sum these. and then they will hopefully balance assets and liabilities. So yeah, okay, so just adding them all across and then down and just cross-checking them. So my assets at the end of the year total 1, 2, 3, 6, and 99, and my liabilities 1, 2, 3, 6, 99. Okay, so that is that one done.